One thing that I have been waiting for month after month, ever since we started talking about the housing crash roughly a year ago, is the mainstream media and politicians and real estate agents and economists finally starting to accept reality and finally admit that the housing market is going in a downward direction. And that's exactly what we saw happen last week. You're finally starting to see headlines in the mainstream media talking about how the housing market has officially posted a year-over-year loss. I'm sure a lot of you probably already know that. I'm definitely not the first to make a video on that. But the reason I wanted to start off talking about this is because this is basically my told you so moment. You know, I've been talking about this for about a year now, and people just don't want to see it, you know, and now it's to the point where it's impossible to ignore. You cannot ignore the fact that home prices now are down year over year. It is a fact, guys, but it always depends on what source of data you look at, because right now the only source that shows that it's down year over year is Redfin. And when you look at things like the National Association of Realtors, or you look at the Schiller home price index and those different data sets, they don't yet show that the home prices are down year over year. But that will come at a later time. You will see as time goes on and those data sets get updated that they will start posting year over year losses as well. It's just not as quick. Even though it's a small drop year over year, it's only down 0.6% year over year according to Redfin as of February. But the reason that's significant is because there has been no year over year loss in real estate for more than a decade, guys. The last time that we saw a year over year loss would be 2012. So we're talking 11 years ago was the last time something like this happened. And that's why it's significant, because now that the information is becoming in your face and readily available to everybody everywhere, there's no more denying it. So my question is, where does it go from here? Do economists and politicians and real estate agents and everybody else with a vested interest in this thing start making up new lies to make it look like everything's okay? Do they finally admit defeat and let's look at the best strategies moving forward? I don't know. It's too soon to tell, but it's definitely going to be interesting to hear what people start saying now that this is the case. And the interesting thing about this story is now real estate forecasters are no longer debating the fact of whether or not home prices are going down, but now they're trying to figure out how long is this going to last. And according to a prediction from Fannie Mae, they think that the housing prices are going to continue to go down at least until the end of 2024. And I think that's a pretty solid prediction. However, I think that it's probably going to go down for much longer than that, especially since there's so many similarities between this housing crash and the last one we had in 2008. And it basically took 4 to 5 years for the market to go from peak to trough in terms of pricing. And considering prices year over year just started turning negative in February, but declines have been happening since June of last year, I think it's safe to say that we could see prices go down well into 2026, guys. This is just the beginning. And I have been saying this for a long time now. And, you know, it does give me some level of satisfaction to see these predictions and things that I've been talking about become facts and reality. It's no longer just conjecture, it's what's really going on. It's indisputable at this point. And for those who've been paying attention for a long time, have known this and have been ready for this for a while. And that puts you into a major advantageous situation, I believe. And that's what I'm really trying to bring to the table for everybody who watches the channel, is this just to try to stay ahead of the curve on all of these things. And looks like it's working out pretty good so far. Because even the Realtor Association, their predictions are still pretty optimistic, guys. They think that home prices are only going to continue to go down throughout the second and third quarters of 2023. And then somehow they think there's going to be this miraculous recovery and things are going to start shooting back up. No. And you know why the answer is no? because mortgage rates are likely to be even higher in the third quarter of 2023 than they are right now, since the Fed has said time and time again the interest rates are going to have to go higher. So there's that, and that's going to be just in time for the recession to be called official, in my guess. That's what I think is going to happen, probably towards the end of this year, third quarter. That's when it's going to be game over, guys. That's when they're going to say, yeah, here's the recession, okay? That will likely be indisputable by the third quarter as well. And there's just so many other factors to this as well. Like we talked about last week, you have rental prices dropping in many different places across the US, and in almost every metro, it is cheaper now to rent than it is to buy. And as interest rates continue to creep up, that's going to continue to be more and more the case, guys. These interest rates at these prices are completely unaffordable. And the economists and the Realtor Association and everybody like that, they're completely hinging their bets on the fact that they think mortgage rates are going to reverse at some point later this year. Now, I have no doubt they're going to fluctuate, and they'll probably go down a little bit again at some point this year, just like they did over the past couple of months. But after that, it's probably going to just shoot right back up. Plus, you have all of these mortgage companies trying to do all these games to get people into homes. It's kind of ridiculous, you know? We talked about how you got Better.com sitting there trying to get people into homes and use their Amazon stock from Amazon employees as a down payment on a house, guys. That's like major red flag alert. People are broke. We have to start pledging our Amazon stock to even buy a house. And that's if their income even qualifies, which likely it probably doesn't. Now let's switch gears and talk about a big looming issue that's going to continue to become more and more of a problem over the next couple of years, and that is Airbnb and the banning of Airbnb, essentially. There was this big story out of Plano, Texas, talking about how they are looking at completely getting rid of Airbnbs over there because there was a recent problem where one Airbnb was rented out and there was a shooting, and the bullet ended up going through some nearby neighbor's window. And obviously this caused a big uproar in the community, and people are pissed off because, you know, they work hard, they live in a nice neighborhood, and you think you're gonna have peace and quiet enjoyment of your property, and next thing you know, you got bullets flying through your windows because you got a bunch of hooligans staying next door renting the place night to night like a hotel room. And the story gets very interesting because there's a real estate agent over there that they interviewed for this story. She says that she has closed over 100 transactions in the last couple years, and about 80% of those houses that she sold to people, they're looking to rent out their houses short term. So you're talking 80% of these people are investors, guys. They're not looking to live in the neighborhood. So that's just like, imagine, you know, I'm walking down this neighborhood right here, and 80% of the houses on this street are Airbnbs or rental properties, you know? It's kind of insane when you think about it. And of course, this realtor is saying, you know, that nobody should be able to tell her what to do with her properties because she owns a couple of these short-term rental houses as well. And then of course, any other person doing Airbnb in the neighborhood isn't happy with this, that they're trying to outlaw it because they feel like it's their property. They should be able to use it however they want, right? Check out this El Camino. You don't see that every day. I know if I walked past this without saying something, somebody would be mad. It's pretty cool. But here's where this gets all tricky if you ask me. These neighborhoods are zoned residential, just like here where I'm walking, okay? So the ordinance that zones it residential prohibits hotels, motels, and bed and breakfasts in these areas. And what is an Airbnb? It's basically a hotel room, guys. I mean, to say that it isn't is a big fat lie, okay? It's a hotel room. You're just using the house as a hotel room versus going to an actual hotel. And this has been a lot of the controversy here in Miami as well, which I'll talk about that in a little bit. But basically, The argument is that if you're running a property or a short-term rental as a hotel, then it should have to follow the same laws and rules and regulations as hotel rooms do. So you got residents over there that are now scared because there was this shooting in the neighborhood, and the people who live in the neighborhood are speaking out against this. You got one person saying, it feels like I live next to a bar, there's always a party happening now, there's events happening every weekend, and now I'm terrified, things like this. And you know, people can be kind of blow things out of proportion and exaggerate, of course, to try to get their way. What they're looking to do is maybe adopt some laws similar to what Arlington, Texas does, and over there, short-term rentals are prohibited from single-family residential areas, but can operate with a permit in designated entertainment zones. So now Plano, Texas is starting to develop a short-term rental registration program, and in Texas, apparently the Supreme Court there kind of shot down a law that Austin, Texas put together trying to outlaw Airbnbs. And you have this problem where, you know, a small percentage of the population who are property investors that want to be able to use their property however they please. And then you have a large majority of the people who just live there in the neighborhood and don't want this. And here's where this gets even trickier, guys, because since they want to make zones where this is allowed and areas where it's not, that's very similar to what Miami does, okay? So like in Miami Beach, for example, where I live, they have different zones across the city where you're allowed to have a short-term rental, but right across the street, like let's say this house here is allowed to do a short-term rental, well, that one's not. Now, how is that fair? You know what I'm saying? Like, that's where these type of regulations get sticky, because, you know, what if both of these properties across the street from each other are currently operating as short-term rental, and then the law comes in and says, well, past this line, it's not allowed. So why does one property get favored over the other? You know what I'm saying? And I'm not claiming to have all the answers to this, because I definitely don't. But I'm pointing out the flaws in both sides of it, because on the one hand, you have property owners that want to be able to just use their house and live in a quiet neighborhood without having, you know, parties next door every single weekend. And then you have investors that bought these homes for the sole purpose of doing short-term rentals that want to use their American freedom and rent out these properties however they choose to. And honestly, I think both are right. And that's why there probably needs to be some sort of middle ground agreement on this. And that's kind of what they're looking to do. But like I said, once they start implementing this zoning of where you can do the short-term rentals and where you can't, that's when you start making it unfair for people. But obviously they have to draw the line somewhere. This real estate agent and a couple of her buddies who are in the short-term rental business think that they need to adopt some ordinances and laws that allow short-term rentals to avoid basically becoming party houses and have stricter rules and still be able to use their property for a short-term rental without disturbing the neighbors. And that might be a good idea. But like I said, when it comes to the zoning of who's allowed to do it and who's not, that's where things start to get sticky. Going back to what they did in Arlington, Texas, and they made it so you can't do this in the single family neighborhoods and only in the entertainment districts, what happens to all these people that bought these houses for the sole purpose of renting them out on Airbnb? You know what I'm saying? Like, I kind of covered this a while ago, talking about how I think a lot of people who are still speculating on the housing market are getting in on the Airbnb game way too late. And now that you're starting to see a lot of cities across the US start to really crack down on their Airbnb and short-term rental policies, I think it's only going to be a matter of time before you see a lot of people who are involved in this start to sell off these properties because, you know, they bought them as a short-term rental, and maybe the numbers don't work as a long-term rental. I don't even know if people even think that far through when they're buying one of these short-term rental properties. And once they're not allowed to do it anymore, or they're getting hit with fine after fine because they're doing it illegally, they're gonna start letting these places go. That's my guess. So when you have a place like Plano, Texas, and 80% of these people who bought homes in this neighborhood are real estate investors, I mean, what do you think is going to happen, guys? I think you're going to have a lot of people getting rid of these properties. So I want to know what you guys think. Let me know in the comments if you think people should be allowed to do whatever they want with their homes. Who cares if the neighbors get pissed off and there's parties next door, or you think there needs to be some kind of law and order with this, or if you think it should be outright banned. Let me know. I also think that this is a case of life is not fair as well, because you have always a few bad apples that ruin it for everybody. You know, that's how it seems like everything gets turned upside down, is you have a few bad actors, in this case people that allow anyone and everyone to rent the property and do whatever they feel like while they're there, and then it ends up ruining it for all the responsible Airbnb hosts that are screening their tenants, making sure that people are not throwing parties and they're following the rules and all these things. And you know, like I said, if you have 100 people doing this and you have 10 people who are doing the wrong thing, then it ruins it for everyone. But life's not fair, huh? Now check this out. This is a great story to share with you guys today, especially since it's regarding luxury real estate, and it can be argued that we're walking past luxury real estate right now. Whether you classify it like that or not, the price definitely classifies it as luxury real estate if you ask me. In January, the median home price sold in luxury markets was at a 23% discount to the listing price. And luxury homes priced above $2.5 million are at a new multi-year peak in terms of days on the market, at 61 days on the market versus 37 days on the market just a year ago in January 2022. Now here's your chance, guys, and you better not miss it. For the low price of only $7.7 million, you can own yourself a French chateau that's going to be built in modern times, but with the promise that it will be built, because it's actually not built yet. As you can see, it's just an empty plot of land. So don't forget, that's available for you too. And the current owner paid $1.2 million for this piece of property. And they're thinking that the tech layoffs are having a huge impact on luxury home sales. As of March 2023 now, the data is showing that investment bank bonuses fell 30 to 50%, and mid-level private equity professionals down 33%. So all these bigwigs that are making multiple six figures at high-end tech jobs and CEOs of corporations, things like this, you know, people making $250,000 plus a year, are starting to feel the pinch from this recession. And check this out. The CEO of RH Luxury Homes says that he thinks the housing market has collapsed. And he says it all started happening when interest rates started going up. And one thing that he's certain of is that we haven't seen activity and drops in the market like this since 2008. And that's the CEO of a luxury home building company, okay? And why am I bringing this up? I mean, I know that most people cannot afford a luxury house. So who cares, Michael? Why do we care if rich people are having to slash prices on, you know, expensive homes? Because I think that this is a sign of times to come, guys. When you see people that make a lot of money starting to cut back on things like luxury homes and trips and vacations and going out to eat, this is going to have a ripple effect throughout the rest of the economy. And a lot of these people are, you know, employers, okay? They employ a lot of people, and you guys have seen the amount of layoffs that have happened over the past 8 months, and that's probably going to be something that will continue to get worse into 2023 as people at the top of the chain are suffering. So that means everybody below them is probably going to start suffering as well. But I want to be clear on something here, is I did a survey with you guys on my community post, and I put up a post asking people, you know, what price range are you looking to buy your next home in? And the overwhelming majority of people that answered the poll, well over 50%, I think it was close to 60%, said, you know, in the range of 300K or less. You had a lot of people saying 200 to 300K mark, and a lot of people, you know, in the 150 to 200K area of prices. And I just want to make something clear here. As we move through this housing crash, I believe that homes in this price range are still going to be a hot ticket item in a lot of different places. And you know why? Because that's what people want, and that's what people can afford, guys. even at these interest rates, even at 7% rates, people are still buying homes that fit into this category. And the reason why is very simple. It's because that's what people can afford. So until you see those properties become unaffordable due to higher rates, then you're likely to continue to see people jump in and buy those houses that are priced in the 300K price range or lower. In general, that's maybe not everywhere, because depending on where you live, that might sound like a lot of money, but in many metros across the country, that's pretty much the going rate to be in a decent home in a decent neighborhood. And one other thing that people ask all the time in the comments that I want to clarify here is people ask, you know, what should be my budget for buying a home? And the rule of thumb is that your monthly mortgage payment should not be more than 30% of your gross monthly income, guys. People always ask, is it gross or is it net? Technically it's gross, but if you want to be even safer with your monthly budget, you yourself can just pin it on, you know, your monthly net income instead. And that way it gives you a little more wiggle room when it comes to your payments and your monthly budget, okay? So let's say you make 50 grand a year, you keep it at 28% of your gross, okay? Your monthly income is $41.67 a month, and 28% of that monthly is $11.66 a month. So if you're making 50 grand a year, you probably shouldn't be spending more than about $1,200 a month on your mortgage payment. And that includes everything, guys. Mortgage, taxes, insurance, HOA fees, if there are any, whatever. That's the whole 9 yards, okay? Not just the mortgage payment, and then in addition, you know, more than that. Look at that. Got a white peacock. It's like an albino. So I'm gonna flash this chart up on the screen real quick to give you guys a quick rule of thumb. You know, you make 50 grand a year, $11.66 a month. You make 75 grand a year, $17.50 a month should be your budget. 100,000 a year, you shouldn't be spending more than $23.33 a month, and so on and so forth. And it also shows the home price roughly that you can afford as well. And remember, the price of the home does not include the HOA dues. So if you're buying in an HOA community, you're always gonna have to add extra to that. And the other thing is, guys, you need to verify insurance numbers. Now that insurance has been going haywire in Florida in particular, but in other places too, you know, you have to verify how much you're gonna be paying in insurance each month before you bite the bullet on any of these properties, because that's probably going to be the thing that kills the deal nowadays. That, and you better plan on your property taxes going up, because if you're going by what the current owner's paying, that's not going to be accurate either. And I will cover that more in a future video when it comes to property taxes, how much you might expect it to go up by, and so forth. So if you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video. And if you don't want to wait, check out my next one on the screen right over here, and I'll see you over there.